So, how to payroll management? So, I define you. A company is a financial list of salary, wages, bonus, net pay, and deductions of their employees called payroll, or in other words, within a company, payroll is the combination of all the financial record of their employees, salary, wages, bonus, and deductions. Payroll define can't be complete without giving description of gross payment, gross deduction, and actual net payout to an employee in a render date, and noted that this payment and deduction can calculate according to rules and laws which may be differ organization and state to state. Payroll department. Payroll refer to process by which employees receive their salaries. HR function involve balancing and recording payroll data and depositing and reporting taxes. The payroll department take care of wages deduction, record keeping, and verifying the reliability to pay data. An important part of financial accounting. Payroll is central to a copy's financial accounting for many reasons. In accounting, payroll is important because payroll and payroll taxes greatly affected the net income of most companies. Payroll is also often subject to numerous laws and regulations that companies need to cooperate with. It is critical that every employee receive their pay accurately and with the correct withholding and deduction, and for an organization to granted that this withholding and deductions and are submit in an appropriate manner to the correct entities. This many include salaries, payment, pay, check deduction, and tax withholding. Mainly a payroll management module include organization management, recruitment and training, attendance processing, payroll management, PF, ESI, TDS, arrear and bonus settlement, employee help desk, appraisal and career management, final statement, performance management, reimbursement, HRMS, leaves and loan, employee self-service, stationery, compliance. Drafting lawmaking in India. How to lawmaking in India. Drafting of law by committee, bill presentation and passed in Lok Sabha, law or House 2, bill presentation and passed in Rajya Sabha, upper house 1, signed by President of India, published in Official Gazette. Act comes into force. Lawmaking in India, state government. How to lawmaking in India, state government. Drafting of law by committee, bill presentation and passed in Vidhan Sabha, lower house. Bill presentation and passed in Vidhan Parishad, upper house 1, signed by governor of state, published in official gazette. Act comes into force. Budget unit. Budget. The Union Budget of India, referred to as the Annual Financial Statement in Article 112 of the Constitution of India, is the annual budget of the Republic of India, presented on first week of Feb, presented by Finance Minister. Read more about Union Budget at make short notes of change in budget for current financial year. What is the income tax? What is the income tax? An income tax is a tax imposed of individual or entities that varies with respective income or profit. Income tax generally is imputed as the product of a tax rate time. Taxable income taxation rates may vary by type of characteristics of taxpayer or slave-wise. The Income Tax Act 1961 is the charging statute of income tax in India. It provides of levy, administration, collection and recovery of income tax. Type of tax in India. There are two types of tax in India and can be characterized as direct tax and indirect tax. Type of taxes: direct tax, indirect tax. Indirect tax, property tax, wealth tax, etc. Direct tax, custom duty, service tax, VAT, sales tax, etc. Direct tax is a tax to pay on your income directly to the government, and indirect tax is a tax levied on goods and services rather than on income or profit, and it is collected by an authority for the person who bears the ultimate economic burden of the tax. What is TDS? TDS is tax deduction at source, where the tax is deducted at the source of income, merely assuming that you have taxable income. Under Section 192, tax of salary, income tax is required to be deducted under Section 192 of the Act from income chargeable under the head salaries. In India, income tax is levied of individual taxpayer of the basis of slab system, where different tax rates have been prescribed for different slabs, and such tax rates keep increasing with an increase in the income slab. Such tax slabs tend to undergo a chart during every budget. There are three categories of individual taxpayer. Individual below the age of 60 years, which individual resident as well as non-resident. Resident senior citizens 6 years and above but below 80 years of age. Resident super senior citizen above 80 years of age. Income tax slab for individuals below the age of 60 years. Income tax slab up to 2,50,000 to 0%. 2,50,000 to 5,00,000, 2,50,000, 12,500. 5 lakh to 10 lakh, 5 lakh, 20%. 30%. Rebate Section 87A, tax rebate of the 12 12,500 provide for individual taxpayer to reduce the tax burden of the lower income with annual income up to rupees 5 lakh. Rebate in applicable to resident individual only up to 12,500 of tax whichever is lost. Surcharge 10% of income tax where total income exceeds rupees 50 lakh up to rupees 1 crore. Surcharge 50% of income tax where the total income exceeds rupees 1 crore. Surcharge 25% of income tax where the total income exceeds rupees 2 crore and charge 37% of income tax where the total income exceeds rupees 5 crore. Marginal tax relief is available in cash surcharge amount. Additional income tax on the excess of income over the additional income surcharge can be calculated in such cases as additional income into 70 by 100 health and education cess and additional 4% health and education cess will applicable on the tax amount calculated. Senior citizen income tax to rupees 3 lakh is exempt for tax for senior citizen is 60 years for above but less than 80 years. Super senior citizen income up to rupees 5 lakh is exempt for tax for super senior citizen age 80 years and above. Under section 194J, fees for professional or technical service TDS is required to be deducted on the fees for professional or technical service. Under section 194J, tax has to be deducted in case the payment is greater than rupees 30,000 during the year. Any payment covered under this section shall be subject to TDS at the rate of 10%. In case the payee does not furnish his PAN, then the rate of deduction would be 20%. Type of person assessed. Under the Income Tax Act, income tax is payable by every assessee. An assessee means a person by whom any tax or interest is payable. The term person under the Act includes an individual. It refers to a natural human being, whether male or female, minor or major. HUF. Hindu undivided family. It is a relationship created to operation of Hindu law. The manager of HUF is called Karta and its members are called corporations company. It is an artificial person registered under Indian Companies Act 2013 or any other law. Firm, association of person or body of individual, local authority, artificial judicial person. Thank you.